Hello guys, glad to have you on board again today. We're gonna just switch Monday and Tuesday, as yesterday was a holiday for me. So today we're gonna take care of the swing updates and podcasts. Tomorrow we're gonna do correction of the MCQ test that have been released last week. Obviously, if you want to get part of it, then no worries, you can do it for free as usual. You will easily find the link in Discord, or I've been posting it on Telegram as well. Feel free to answer if you want to. Obviously, you don't necessarily need to be using the indicator. It is just most likely figuring out where there are things that I need to work on to make you guys better using them. Simple as that. Anyway, so today swing, tomorrow we don't correct the MCQ test. On Thursday we're going to do intraday, and obviously on Friday we're going to do the swing closing show. The thing is that starting from now, we're just going to replace the Tuesday intraday session by a stock picking thing. I've been answering some questions yesterday, and some guy just told me, Phil, is this thing compatible with a stock picking and not just index trading and everything like that? So definitely yes, it works with every kind of asset as long as there are cycle and volume to support them. So what we're going to do is that we're going to simply apply that and just put another kind of podcast in which we're going to do stock picking. We're going to random screener some stock for some reasons. We're going to try to search opportunities, and we're just going to trade them. So hopefully we're going to be able to find stocks that I'll be able to trade right here in France, because as you know, most of the things we're going to do are going to be US stocks, and I might not have access to every one of them, and I goddamn hate putting out a trade opportunity that I don't trade myself. So anyway, out of this, going back to the swing trades and the swing context that we're going to set ourselves ahead of the week to come, we don't nearly have any fucking thing to do else than waiting for the volatility to show up again. The VIX is at 12.6, so it's basically like we were dead. And we're waiting for something. This something is definitely the big catalyst coming along the way. On tomorrow evening, as we're going to have Boeing, we're going to have Facebook, we're going to have PayPal, we're going to have some Tesla, we're going to have Visa as well. So all of this is going to show up tomorrow evening. So that's the only thing caring or careable about the week. The thing is that any fucking thing else, oh, and Microsoft, sorry about that, and Microsoft, really important one, by the way. So the thing is that tomorrow Eve is the day of the week, and the rest just doesn't count. It feels like this week is going to be played all by this thing, because you know everything about Visa. We're just going to have a look at those stocks, all right? Because I think if we want to figure out what the hell's going to happen with the indices this week, we need to figure out what the hell's going to happen with those stocks, all right? So we're going to look at Tesla, Visa. We're going to have a look at Microsoft, Facebook, and Boeing. AT&T is a big one. We should have a look at this one as well. So we're going to do AT&T as well. All right, let's get back to the charts. Oh, sorry, I'm going to do crypto first. Forgot about this. So crypto is good. I mean, last week was a positive week, like it was expected. We do have a lower shadow candle week with a positive close. So we'll see if we can manage to break up this one or not. And if we ever need another week of consolidation, we still can do it. Remember that the support can be up to $150. So if we were about to fail in here and break down to 150 bucks on Ethereum, then that wouldn't necessarily be the big of a deal to me. So if it goes down, then don't cry for a bear market and anything like that. It could very well happen, and that wouldn't even surprise me. But I would say, and I would suggest, regarding what I have in front of me right now, pretty much say it looks like a triangle. We've gone down two sets of waves, like an ABC. We're kind of hesitating in here. It is hard to say, all right? To me, there's two options. Either we stay in this area, we kind of triangle structure, but still there is a lot more to go. We're early triangle formation. Option number two, it is an ABC correction. We were first sets of wave in here, consolidating flat, and we're about to do this. And if we do that, then that's the C point is going to pay. So if it goes down, really isn't going to be the big of a deal. If it stays there and consolidate kind of flat triangle structure, then that's good as well. That would obviously be better. That means the bears are really, really not in control. Going in there just says, all right, the bears got a shot, but that's all they have. It is hard to say whatever is going to happen with cryptocurrencies. If we do have a look at Bitcoin, then oh no, shit, Bitcoin's been reaching out to the resistance, so I think 5,600 needs to be profit taken. I'm going to go straight forward to this. Alright, sorry, so that's just done. 50% profit taken, that's the expected area I wanted to reach out to. We're definitely reaching out exactly to this, so future will tell if there's a reason or not to get there. That was the profit taking area. I'm just applying the goddamn plan. So I'm also taking 25% out of Ethereum's, even though this one is pretty damn far from the expected target area. But I just need to do as well in here. First profit taking area reached out on Bitcoin. I need to lock on some gains for Ethereum as well. I'll just take 25% because I still expect that there is a lot more to do in here, but still, as the major one reaches out profit taken area, I really need to do something about this one because I could just be wrong about Ethereum, and if I do, I don't want to just lose it all. So if it goes back to my stop loss area, then at least I would have secured 25%, just paid for the risk. And that's it. So 25% still remains. I have 75% in the game. So don't misunderstand me in here. I'm still pretty damn bullish in the crypto sector, especially in Ethereum's. But I think Ethereum's kind of need a positive news flow to just rise from ashes, because right now I still see the volume in here, the bull guys in this thing still have a lot more to expect out of this, but still we need to get up to the first Fibonacci retracement, or even higher than that. I don't nearly see anything wrong in here, but we patiently need to go reaching out further informations in here. So let's say first we work out this area. Once this one is going to be worked out, we're going to probably surge near to this one, 280, or even this area, which is 350 boxes. So waiting for further information regarding Ethereum, as this one is still a lagger at the moment, and I remind you that all I care about is the ETH-BTC spread. As long as we do trade in this triangle, then we don't know. All right, and so far we still haven't broken the support area. We do try to do it, but if for some reasons Ethereum is waking itself up, that doesn't mean Bitcoin will retrace. All that means is Bitcoin is reaching out profit taking area. So it might go a little bit higher than that, but still it shouldn't be that enormous kind of gain. Like we could push up to 6,000. That wouldn't necessarily be the big of a deal, but it will be like an additional 12% on the Bitcoin, in where we could make more than 100 out of Ethereum. And that would obviously put the Ethereum Bitcoin charts up to breaking this resistance. But until then, I need to goddamn secure the trade. All right? So 25% of the table, just in case Ethereum was about to lose ground versus Bitcoin, which I don't really think is going to happen. But still, at the moment, you need to cautiously take this approach regarding Ethereum's. All right. Aside from cryptos, though, so like we said, we're gonna have to watch out for stocks. So first of all, Tesla. How bad does this look to you? We're definitely going to break this trend line, I think, and probably going to break this channel as well. So you can expect some downward pressure out of Tesla's earnings release, unless I'm totally wrong, and this is great. That's possible, but I don't nearly even think that's what's going to happen. We've been consolidating for quite some time off this trend line. I think we'd have absolutely no reason to hold it. But still, if it happens, I'm out the game. If we break down, I'm going to take some nice gains for the work that's been put in motion for almost 3 months. Microsoft. All right, this is what we have on the daily chart. Like I said, if we do some weekly bearish engulfing structure, I'm definitely gonna sell that shit. I don't nearly even think this thing will be bullish out of its earnings release, but this is a bubble, and you don't fight the stupidity of whoever's goddamn crazy enough to buy that. We don't know, so definitely not selling before we get the actual earnings release. The earnings could be disappointing, or even they could be good and be sold. The thing is that as long as on Friday we close with a bearish engulfing structure, I'm going to sell that shit again. But if it goes positive, then we're just going to let it go and wait for further prices and another opportunity. But as long as this doesn't bearish engulf, I don't want to do anything on this one. So Microsoft unable to read this one unless it shows some weaknesses. Facebook, definitely a goddamn pullback out of a dead cat bounce. We can clearly see the two sets of waves. So this one, high probability to gap up with the earnings release, but it will be a selling signal. So the thing is that I'm going to have to anticipate this. So I'm going to sell Facebook before the earnings release, just in case. But I'm definitely not going to leverage this because it could be just good news, rising up to resistances, but it will be selling prices anyway. So I think there is a need to anticipate Facebook by a tiny short entry prior to the earnings release, just in case it falls like shit. And I still believe that there is a little bit of an upside to do, searching for this horizontal resistance area, and normally in here this is where the big selling entry should be done. So I'm going to put all that in there, right? So Facebook, even if it goes up, it's bad afterwards, and I think anyway this thing once it's terminated is shit, right? So kind of expecting sideways action, bam, bullish gap with the earnings release, but just like we've done before, bullish gap, oh shit, that doesn't work out. But this time we'll kind of have two sets of waves, and the next one is going to be just a pain trade to the downside, kind of a crashing market. Remember how it goes. We're going to slowly deteriorate the price valuation for almost a year and a half, and probably going to go down to those areas in here. Last time we've been pricing this correctly. So out of current prices, that's a pain trade. Those who buy it right now are going to have to suffer some losses. That doesn't mean it's going to happen, but that's what I'm trading. Visa, same thing goes in here. If we bearish engulf on the week to come, I'm selling that shit, no questions asked. So I'm waiting for the earnings to show up. I'm waiting for the pricing, for the market's reactions. You can see volumes are literally dyingly dropping in here. Dangerous, of course, which means this has two ways to end. Either we go crazy higher to search for volume, or option number two, we find the bears taking it over, and then we're crashing, just like it's a Boeing kind of stuff, right? It's a switch. It instantly goes bullish to bearish, and it never ever recovers from it anyway. So the thing is that it's hard to anticipate. If you want to sell, you can. The thing is that I've already tried to sell Microsoft just once, and it didn't work out. So I'm not going to sell again. And I've burned my anticipative trades, all right? I've done it. It didn't work out. So now I'm waiting for price confirmation to get back in that game. But if you didn't shot anything at Microsoft or Visus, I think you can try it out just right before the earnings release. If for some reasons they're disappointing, then you know what's going to happen. Thursday is going to be a bearish gap, and we're going to sell hard on indices if the Microsoft, the Visus are disappointing the markets. And they may very well happen because they're going to have negative guidance probably, and negative guidance at historical highs, that cannot sustain long. We've got Netflix as well. No, not this one. We've got Boeing. So Boeing earnings release are probably going to be a massive piece of shit. So on this one, I expect some bearishness. So you might see the Dow Jones suffering quite a lot of this if it happens. And that's pretty much it. So the thing is that it depends on how the market will digest all those shits. And all of this will happen Friday, on Thursday, Wednesday after the close. So Thursday is going to be a gap, either up or either down. I goddamn don't know. It depends on the earnings themselves and how the market will price them in. So I would suggest this week, if you want to anticipate, to me, it's bearish anticipation. So if you want to sell prior to the earnings release, then you can do it, but you have to do it pretty cautiously, because I think if you don't anticipate those gaps, if they gap to the downside, what we're going to have is nasty, is this. It's an Iceland reversal, and it's going to be probably gapping down this level. So 28.48, just note down that level for the week to come, all right? In bad cases scenario, we might be gapping down this price, below this price. So look how high we are compared to this, right? So this is where we could gap down on Thursday for the cash session, which is obviously 2% lower, all right? So be aware that the guys who are releasing on Wednesday are big guys, and they're going to have impact on other assets. There are multi-classes. We've got visas for consumers. We've got Microsoft for technology. We've got Teslas for cars. We've got Boeing for planes. So it's multi-sector publications and earnings release. If they all miss and if they get all sold, then it's going to be bloody on Thursday. You can be damn sure about it. The thing is that we've got a nasty Iceland reversal structure going on right now on the daily chart, right in here. So if Thursday we're gapping down this area, if for some reasons, goddamn, if we're holding to this, fuck that, what the hell is this? All right, so if we're holding to those current prices until Thursday, which means today we do some nasty prices and tomorrow as well, we stick close to this area, and if Thursday gaps down, then this is the worst case scenario. This is an Iceland reversal, and we're never ever going to go historical high, because if we do such thing prior and below the current price, below the previous highs, and it's over. Everybody who thought we're going to go historical high would just be proven wrong instantly. So it is all about what's going to show up on Wednesday. Until then, I got nothing else to say regarding stock market, because it all just depends on the earnings release, and I'm not seeing the future. I don't know what the hell's going to be in these numbers. All I can tell is that it's going to be a big market mover. If it's great, then we kind of probably open up right at historical highs. What I can tell is that it's very dangerous at the moment, because no one is getting to cover. All right, the VIX is here, 12.6. What the fuck are we doing in here? I don't really understand what the hell's going on right now. So either Wall Street is right, and everything's gonna be fine, and we never ever going to have a recession, or Wall Street is playing the most dangerous game ever, and they're going to create a nasty financial crisis. That doesn't mean we're all going to die, and the economy will never survive this. I don't really think that's the kind of thing that may happen. But still, if a financial crisis is down the road, it's not going to be a pretty one, because it's just going to be 2008 all over again, and it might last at least a year or two to figure out what the hell we're going on. And hopefully the central banks will be able to support the economy without breaking it. But still, I'm thinking that the recession is the most likely thing to happen, even though Wall Street is doing anything they can to just prove me wrong and just prove the world wrong. Like, you were wrong to be fearing a recession. There's not going to be such thing. If there is such thing, then they're going to have to pay for this, and it's going to be costly. All right? So they've been pricing in for the best. If the worst happened, then brace yourselves, because you're going to have to destroy your shit tons of dollars. So regarding the forex market now, no, we're going to talk bond market instead first. So bond market, as you can see, is still trading sideways, but as we can clearly see in a daily chart, we're kind of being over out of falling yields. So yields are going to rise. Now the question is, what the fuck are going to do equities with it? If equities rise as well, then that's great. It means that we were over-fearing the recession, definitely was. The thing is that if stocks goes down as well as yield goes up, so bond market going down, all right? So the bonds going down and stocks going down means we're heading toward recession. We're going to have reversed yield curve along the way, and that's not a good sign. So that's definitely what I think is going to happen. You know that for some time. If we have that, the dollar can be nothing but bearish as well. So it's a bearish triple in which bonds are going down, stocks are going down, and dollar is going down as well. That's what I'm pricing in. That's my plan. If it shows up, I'm gonna be rich. Sorry, I'm gonna make money because that's what I've been speculating for. I've been doing my job and managing my risk, but definitely out of this very, very ugly year, beginning of this year, because I basically started very well on Monday, on January, to just lose all this money lately out of the US trades that just fucked me up. But still, I mean, we're half of well, late April, and the thing is that I still have barely some gains in the pocket. Obviously, AUDNZD has been rising, so that's good. I still have this one, but still, I need to make my euros money, and I goddamn hope that this scenario will trigger because it's probably going to bring a shit ton of money. So that's how it is, and obviously if it doesn't work, it's another loss that's going to show up on the forex market and everything like that. So for now, I'm not trading the bond market because it has expiration and I goddamn don't like that, and I still hope the stock market will go down. If it doesn't, then I'll switch trading the bond market, obviously, but for now we're just having a look at this. What I'm watching closely is that I would like to see the 2-year yielding rising a little bit faster than the 10-year, and I would like to see this one crossing this resistance first. All right, so what I'm watching closely at in the forthcoming days and weeks is I would like to see the 2-year yield breaking this before the 10-year yields break this. All right, that's what I'd like to see. The 2-year yields rising fastly. As you can see, we got range structure going on in here, suggesting we might build a range out of this, and I suggest the range is going to be built out of this. Okay, so we could range in here, kind of get that, consolidate, building a higher low, and then bam, we're going to probably retrace up further away, probably going back to 3 and even higher in the late stages. So that would mean if we have this, all right, that will probably mean that the Fed will have to be more accommodative, which means the 10-year yields were probably not going to surge that much, and we're going to have reversed yield curve. 2-year yields rising faster than the 10-year yields and crossing them to the upside. So for now, no problem with that. It's still fine. Don't be so too pessimistic. But I still tend to believe there is a switch, and Wall Street is doing anything they can to prevent this switch to happen, but still they don't make choices. That they might be doing anything they can for the casino to keep on playing and having people playing in every day, but still I think the problems are here, everyone sees them, and that's really causing problem about market confidence, and normally that's not good for business, that's not good for money circulation, meaning that's not good for growth. So I think the process of a recession showing up is already in motion. I think they're doing anything they can to stop it, but that doesn't work. The confidence is not here. That I don't see institutional buyers getting into that big rally we had recently. All I see is that those guys are questioning if they should buy the supports or not at all. So either way, they're waiting on support areas. So I think all the game about what's happening right now is about support areas. So I see some nasty speculator playing a dangerous, no. I'm going to get back to actual pricing. So I see some speculators thinking that the more we rise, the more we fuck up the bears, and the more we have chances to go historical highs to print the emotion that there is no recession. The thing is that they want to go historical high just to prove the guys that were bears that they're wrong. They want to go there, but the question is, can they? If Wednesday end up being a bloodbath, and we gap down, like I said, it's going to be a settled game. It feels like the earnings release are most likely playing ahead of what's going to show up on Wednesday, because it's going to be broadly sectorized. And if all of this is negative, I don't nearly think it's going to be the case. I think some will be positive, some negative, but still I think more negativity to expect. If that's what's going to show up, then we're just going to be destroying everything we've been doing so far, anticipating some good things, because it is no good if we have negative guidance on some assets and on some asset classes. If things like Boeing starts falling even deeper and triggering the crashes, then that's the end. That simply means it is too late to think about historical highs. We're just going to fail below, and then reversing yield curve and everything like that, and the worst will just be coming along the way. I'm not saying that this will happen just in a week from now, but it's a process that will be hard to reverse. If we are about to fail in here on the SPX, return back to support, close this gap, it means the party's over. And we're going to need strong stuff to get back to the historical highs, and we could do it. And I stand on this. If we go down, and if some good news, really good news show up, like the recession really dampens, and we got very less chances to have it. If that happens, then we could do this, and I'll be ready and accepting that I was wrong and that we can go historical highs. But I still tend to believe that we're going to have to test this gap, probably close it, and that's where the decision is going to be showing up. Either in here, the institutional will say, all right, now we need to buy, and we're going to go historical highs, or they don't. If no one is supporting this area, then this is where the big problem shows up. We're going to obviously have the bears profit taking in here, all right? But if no bulls are getting in, if it's just bears profit taking areas, and if that's what shows up, then we're going to start falling afterwards. And if we start falling out of this area, the next support is there, it's not going to hold. It's a trend channel on a range, so it's definitely not going to hold, it's going to be broken down. So the thing is that if we go down out of this, there's a second cluster area in which we can do some sideways action, obviously. But this one is very likely going to drop as well. The next area out of this is going to be a little bit in here, but I don't nearly think it's going to work, and a big one in there. If this one doesn't hold, this is where the big problem shows up. Because if we reach out to this area in here, with a negative yield curve, with a dollar falling like shit, like we said, the reverse yield curve is like the death cross. If it shows up, then we'll know a recession shows up. And if we have the dollar falling in the same time, then there's not even a single chance that the dollar may reverse this bear trend. So it means if it shows up and if it happens, there's no coming back. It means that whether you like it or not, we're going to have a recession triggered by the US financial crisis. I've been clear with this. The financial crisis, if such thing happen, is going to come out of US risk-taking problems. So far, it does work well, so don't overestimate what I'm saying in here that it has to happen. Definitely nothing has to happen. Everything can happen, but as I said, if we're heading toward financial crisis, I know who's going to trigger it. And it's not the Europe, it's not China, it's US. And I've been clear about that since the day goddamn Trump got elected. I can be goddamn wrong, so don't put the house on this. Don't say, okay, Phil's a good guy, he's been right so far, so he's definitely going to have it right with this recession. If you do this, then no, you're trading out of someone else's scenario, and that's not how it works out. I'm giving you my scenario so you guys know why I'm trading. I do have my vision. I do trade my signals. So far, they didn't really work well, but still, that doesn't mean the scenario is wrong. It means that it is risk management. I failed. I'm waiting for prices to prove me right. Now, if they do prove me right, you can be damn sure I'm going to be the first one to sell again on a swing trades on the US. But for now, I need this goddamn Wednesday to show up. I need those numbers, and I need to know more about how prices will react to them. All right, so waiting for Wednesday is all I can tell regarding this week to come for swing traders. Obviously, those who want to take anticipative entry, it's possible if you do risk manage. But it has to be done in a short run. And what we can see right now, if we do have a look at more intraday trades, it's just that nothing happens. We've got two sets of waves we're tracing to in here, probably a triple top setting itself. We're trading at the anticipated pitchfork. So the thing is that if it reacts in here, it kind of makes sense. But at some point, I want to see this, all right? Remember, in order to go bearish, we need to break down, all right? So we were bullish, so we need to break down, and this breakdown will first build a range, all right? The thing is that I think this range is already in motion, all right, which means we already have the range scenarios in here. We already broke down and returned back to the trend channel, or the context channel. What I think is that what's coming next is kind of this. Wave one, back to trend channel, rejecting this, bang, okay? Anytime we go there, there's a breakout trade, okay? We've been rejecting the trend channel. We will build higher lows, lower highs, I expect will be a lower lows afterwards and start retracing down the support areas. First one is going to be 23.6 profit taking area out of 28.73, and I expect we're probably going to go lower, searching for this gap afterwards. It obviously requires Wednesday's breakout. Like I said, we're probably going to be there out of tomorrow's earnings release, and then I don't know. Either it's bullish, we're going to go straight historical highs, or straight to the previous highs and accelerate toward historical highs. Option number 2, it's bad numbers. We gap down and we trigger the breakout. In that perspective, it's going to be wave 3, in which we're going to do wave 4 and 5. Afterwards, we're obviously going to have some consolidation as well before starting deteriorating even further in time. All right? So that's the expected path. That doesn't mean that's exactly how it's going to happen. It's just that you need to have some projection about what the next move could be. To me, the next move is either we fail and that's another set of bullish waves, or we do it right, and in that perspective, I suggest we're going to have a bearish breakout because we already started accumulating potentially on this 1 hour chart time frame. Now forex. All right, these are global indices, so like you can see, some indices are pulling back, and that's the short-term. That's the weakest ones, the Russell. So if small caps are pulling back, it's not necessarily a good sign. But still, Australia had a wicked session. What is that? Yeah, 23. All right, so good session on the Australian stock market, but still, the thing is that we're trading at resistance, we're trading out of context in a range, so that shortly means that normally they're not going to go making new highs, they're most likely going to reverse as well. So it's the same future as the US. Either it's good, there's no recession, we go historical highs, every broad indices, or there is a huge problem. The broad-based indices doesn't make it. Only sectors manage to make historical highs as a fake breakout, and then the worst is to come. Because if we do this in a sector basis, just having a look at the sectors in the US. All right, so that's a sectorial basis. So as you can see, materials, staples, all of these are really, really weak. Industrials, healthcare has been obviously surging to the downside last week. Utilities are going down, all right. Discretionary are kind of an inside bar. So it is not good. That means discretionary out of previous historical highs, they're not supporting this. They're trying to, but so far it doesn't really work well. They need to do anything they can to sustain valuation going to the upside, because any pullback is going to suggest what I think it is. It's a goddamn fucking range. We try to sell in here, didn't work out, but still, that doesn't mean this isn't a range. Right? We broke the previous lows, we can just break a little bit of the highs and then just die in between. That's what I suggest. Financials are still pretty weak. Same thing goes for technology. We do have to maintain this momentum as long as this momentum fails. As soon as this momentum fails, it's terminated. It's a crash. We know that this is the final wave for technology. This is the end afterwards. Whenever this thing fails, it's over. So they have to do it great. Technology sector has to go straight forward. Anytime we're going to look back, if we just look back, we're just going to fall. So it is about selling the dreams of a better tomorrow with technology leading the US. And like I said, I don't nearly think that's what's going to lead the US in the next economic cycle. I think the technological sector is going to be overseas and most likely in China. China is going to build everything you're going to be consuming in the technological sector tomorrow. They're going to build your cars, not Tesla. The Chinese are going to build the cars just like they build your phone, just like they build any fucking technological stuff you'll use in tomorrow's world. But still, that doesn't mean the US will do nothing. That just means the US will have to transform to services and AI. Like I said, these are you really guys are the best out of AI, and it is not even a question. You've got the data, you've got the Googles, you've got everything like that. So those guys, they'll have to transform activity. And that means if you're betting it all on technology, you're probably betting in the wrong thing, because technology is probably going to go overseas. That's already in motion, and I don't nearly even think this is something that can be reversed. Trump is trying to do anything he can with the with the patent system and everything like that, it's over. They already fucked you up. So it's too late to think about saving technology. It's most likely about saving the knowledge you have regarding AI, regarding services, and try to move on to disruptive areas where you can change something. So I would say the US is definitely going to be another leader and big leader of the next economic cycle, but definitely not of technology. So the guys who are selling you the US stocks as technology being the future, it's just probably bullshitting. That the US technology, to me, all right, I'm going to go straight forward in here. I've been saying this all over, I've been saying this already in the past. To me, today's technological dreams are exactly the dreams of General Electric back in 2000. All right, we're here. The technological sector is great. That's where this is the future. Yeah, no, it's no future. It isn't. I'm sorry to say that, but I don't nearly think technological U.S. stocks are the ones that's going to lead the future. The ones that's going to be having so much competition from China that we're going to buy from China. That's simple as that. You make people poor, they're going to buy they're going to buy cheap. And the problem is that cheap is definitely not what the US is doing. US is doing top-notch quality, anything like that, but certainly most likely top-notch prices as well. Prices that people can no longer afford. So they're buying Chinese, that's simple as that. China has got it all right. By now, they're going to take over the entire technological sector in the US. That doesn't mean the US will have nothing. Like I said, it's just they're going to have to transition. And some companies have already been figuring this out. I mean, Apple is not even fighting this. And hopefully they won't, because the more they try to fight that, the more money they'll burn for no reason. They need to move to services. Selling phones is not what going to do. Apple's not going to do this tomorrow. They're no longer going to sell phones. They're going to sell, but lesser phones, far lesser phones. Simply because everyone is moving to Chinese phones. They're better and they're cheaper. So what the fuck would you buy something just because it has an Apple on it? So, all right, anyway. So, like I said, forex market now, and we're done. All right, so that's it. So the forex sectors for the week to come is, I would stick to the previous plans in terms of swing trades. We're still ranging on the euro dollar. I think USD GPY is still hesitating in the same area. So we're going to go straight forward to what I think about the week to come. It is hard to say, like I said, the market is just literally dead. Nothing happens. We're trading this range for almost a fucking year, all right? So last time we've entered this price area was in here. It was July 2018, and we're still fucking there. So no one has a goddamn vision about the future, and there is really two opposite visions of the stock market, of the market itself. Either it's fine and the US are going to be leading a big bubble before we burst the entire financial system. So it's trying to find the limits of finance with credit, speculative bubbles, and commercial wars. And having this, it's not going to work out. We're just going to fuck up the entire capitalistic system. And the worst will come afterwards, like nationalism and everything like that. Eventually wars, but still, it's not going to be pretty. If we do this, we're probably going to destroy the financial system, and that's the only thing that guarantees kind of a stability in the current world, even though wealth is pretty badly spread all over the globe. Still, that's the least worst case that we found in years. I mean, capitalistic economic are not necessarily the best we found, but that's the least worst scenario. So I will stand to this. We might have to transform it because we do have some problems with capitalistic way of managing the world, but still, it isn't that bad, and we need to make sure we're not going to destroy it by going too far. So we'll see about that, but I still tend to believe that a little financial crisis wouldn't necessarily be for the bad. It's probably for the best if we do this, because we're going to have to transform the current market structure, and in order to transform, we generally have to destroy a bit earlier. So first we destroy, then we restructure, and we start all over again. So that's what I'm betting on. That doesn't mean it's going to happen. Just needs that I have the signal suggesting this may happen. I'm not seeing any further than that. that's probably it for today. I think AUDNZD is kind of going sideways as well. So regarding the dollar, it's a goddamn range. As you can see, multiple ranging signals. It's just fucking noise. So I would suggest in here, you just wait for an actual breakout to show up. And so far, it isn't showing fucking up. All we can say is that the last time we've been crossing was a support area. All right, so, and we didn't even crossed it. So the last time we've been rejecting, oh god damn it, on this range is there. All right, so this is how it goes. All right, so it's a goddamn flat range. All right, so it's first support, resistance, support, resistance. So I stay on what I've said previously regarding the dollar. We're having a range. This range is goddamn mature. Right, and one in here. All right, so 1, 2, 3, 4, 5. Rejection out of a range. So very mature. We're ready for breakdowns. The thing is that we need them to fucking show up. So in order to show up, we need first to get back to support area, all right? Get to context, push back to the trend channel, rejecting trend channel, and bearish breakdown. So there is still some things to do in here when we 4-hour chart. So don't expect it's going to happen in 2 days. It's something that may be setting itself in motion, but it's going to still require some time. These are swing trades. You need patience. If you think it's going to happen by tomorrow, you definitely got it all wrong. So patience, but I still tend to believe the dollar is bearish. From what I can see, early signals suggest more bearishness, but still, we're in a goddamn range that's been lasting for several quarters, and we need to wait for this to actually give us the signal, because until then, that means I can be wrong. And it means we're in the speculative area, so you need to manage the goddamn risk. If you think you're going to be proven right, then that's good. Yes, but you can still be proven wrong in between, all right? So don't forget to risk manage on those cases. So the dollar is still played throughout the same old stuff, Euro dollar and GBP USD. We need to wait for actual signals to trade them. There is also USD GPY having some major impact in there. So I still tend to believe I'm keeping my bullish bias on Euro dollar, GBP USD, and USD GPY, as well as USD CAD can be a seller, but still needs more visibility. This one is hesitating as well. We're trading resistance, so I would say yes, USD CAD isn't a bad candidate for the week to come. So yes, I would stick to this GBP USD to fake break down this triangle and find some bullishness, and that's what they do. Right, that's fine. I've been doing this review for the French guys, and I said we're probably going to reactivate, and if we do, then there's a nice bullish breakout trade to come over the GBP, and if it does, then you know what's going to happen next. It means we tried, we fake breakout in here, bam, next stop is 1.35, and then we go here, we build a breakout, and bam, trending coming along the way. Same thing goes, I think, for Euro dollar. We go in here, we bullish breakout, and we buy any fucking pullback to the trend channel for a bullish breakout context to come over. So on the swing trades regarding forex, I don't really think the dollar is weak. I think the dollar is just weaker than other currencies, and therefore it's going to lose strength. We've been hoping for quite a long time that the dollar will be a safe haven and everything like that. I think it's going to just vanish if the stock market, if the US stock market reverses this week and makes a bearish weekly engulfing structure by Friday. So that's what No. We stick to this. All right. So if we go back to the main chart, USPX out of a weekly chart. All right. Weekly, I said. God damn it. All right. So if we bearish weekly engulf, all right, that's what we do right now. We're here. All right. That's good. But if we do go bearish, and if we bearish engulf by the week, that's last week. All right. So if we do bearish engulfing structure on Friday, that's it. That's the signal I was waiting for. It means in here was just a bear trap, just to try taking down the stop loss for 6 weeks afterwards. 6 weeks of stop hunting. We'll have done 3.5% rising on top of the actual trading signal. That's not the big of a deal. I mean, first swing trade, 3.5%. Yes, that's a big stop loss, but that's an average stop loss. The problem in here is that I was selling earlier than that. That's what fucked me in here. If I didn't start selling prior to this, I would just be fine right now. I would be selling in here, having a goddamn further away stop loss, and I wouldn't even be, I haven't been taking a loss. So yes, it's because I've been too aggressive that got me into this problem. I shouldn't have gone that much aggressive. I regret that. But still, if it was to do it all over again, I'll do it because that's how I trade. I've always been aggressive, and I'm not going to change anything regarding this. So I'm just waiting in here, and anytime I've got this bearish engulfing closed by Friday, I'll be returning to some swing trades, slowly, obviously, but steadily. I mean, low leverage, large stop loss, and I'll start trading again. But for now, I need the prices to confirm a reversal. So I think we'll go in higher in here today, tomorrow eventually as well. But I think anyway, this bearish engulfing is just what seems to be the most probable to me. All right, I'm going to leave you guys with that. Wish you a good week. See you tomorrow for the MCQ test correction, obviously, and thank you for those who participated.